Let's have a look at how to use the 4% and dollar breakout scan to find candidates for either buying or short selling. So we looked at the same thing yesterday, and you can look at yesterday's video also. In order to do this, what we are going to do is we are going to use the 4% breakout scan, 4% on the bearish side. We are going to use the 65 days trend intensity to find stocks with trends. So quickly, let's have a look at it. Like, this is 4% breakout, stock should be up 4%. This is 4% down. So if the stock has 4% breakout, you'll see a signal like this. If it has a 4% breakdown like this, so as you see, the stock started with a 4% breakout and it kept going up, and it's up 357% actually. So that's like now for the TI65, you're looking at TI65 above 105, which will show it green, and you're looking at TI65 below 0.95 red. This is how it will look. And for dollar breakout, you're looking for stock which is up 90 cents on 100,000 volume. Similarly, you're looking for a stock down 90 cents on 100,000 volume. So that's the thing. Basically, I use this particular template as the template which I use all the time. Okay, so and then when we are looking at the 4% breakout, the scan is run on Universe. Universe, as I explained yesterday, is basically stocks. Universe is a list which I create, so it has 7,293 or something stocks now. So what it consists of is US stocks. So all the US common stocks, I copy them into Universe. Similarly, I copy all the American depository receipts, which are like stocks like the Chinese, Indian, Brazilian, or any other stock which is basically from other countries. So it goes into Universe, and also there's the ETF. The reason for doing this is basically you're saving time. That is the only reason to do this. Otherwise, you'll have to run 3 different scans for each one of the things. So once you have the Universe, basically if you look at the 4% breakout scan, the 4% breakout scan bullish side is basically looking for Universe, and the condition, which is the same condition as what I showed here, the stock up 4%, volume is greater than yesterday's volume, and volume is greater than 100,000, and we run it. And similarly, we have a bearish scan. In the bearish scan, we look for something same Universe and stock down 4%. And we also have scan for dollar breakout bullish, which is basically Universe, on which we apply the scan 90 cents. And similarly, you have a bearish scan. In the bearish scan, you're basically applying. So what we are going to do is basically, in order to avoid repetition, there are 2 working watch list. There's a bullish working watch list and a bearish working watch list. So what I'm going to do is, for the bullish working watch list, I'm going to copy all the symbols from this bullish scan into the bullish working watch list. Similarly, I'm going to copy all the dollar breakout into the bullish work thing. The reason being that some of them will be common, so you're avoiding duplication of effort. Similarly, all the bearish 4% breakout go into bearish work. All the 4% breakdowns, they go into bearish work watch list. Okay, so now let's start by looking at the bullish working watch list. You have 166 stocks, I think, today. So again, I sorted by this dollar. Dollar is basically C minus O, so it tells you this stock was down 28 cents from its opening price, as you can see. Okay, or the stock was down 5 cents. So that way easily you can eliminate a lot of these smaller price stocks, because those are not the stocks which I look at. But for the video, I always show these because there are people who are interested in smaller price stocks. Okay, so if you keep going down, you'll see that what we are looking for is a good setup. This was a good setup intraday at some stage, and it went up after that, but like it faded. So that's the problem. So let's look at and keep looking at setups. And the things to look for in a setup is, like, one of my first criteria is it should have linearity. See, this stock went up like very orderly manner, so that's a linearity. Now this stock didn't close near the high, it had a like sideways move, so that's why it is not something which I would consider. But like if it was closing near the high, that would be a good setup. Okay, so we keep going till we find probable setups. And once we have set up, now here is a low price stock. Okay, so this is a bottoming setup, and in the biotechnology stock you will find that many times something like this can also have a follow through tomorrow, but stock is up already 25%. Okay, not something which I am recommending as a setup, but see what is a good setup. This is a definition of a good setup. See, first leg very orderly, small consolidation, breaking out, close near the high, going up. So again, stock is having a 2-3 days of consolidation and breaking out, close near the high, also was not up 3 days in a row. So this day before the breakout was just a small 2.01, that's 8 cent move which was there. So this is a possible setup. Okay, so we flagged it, so we keep going till we find another good setup. Now this is an IPO, I think. Yes, this is an IPO. Sometimes IPO work as a bottoming setup, but the problem is it didn't close near the high, so that's not a good setup. See here, this is like was up almost 4% here. It's a thinly traded stock. It would traded only 20,000 shares today and traded 100,000, 193,000 shares, as you can see here. So I don't know, like see, even this one this was a nice setup. See, the first leg orderly, but like didn't close near the high, so that's a negative on this particular stock. You will not find probably many good setup today, because there were like a lot of fades, so most of the stocks have not closed near the high. Now this is unique here, like here, like say the stock was up already 4%. So yesterday was like, but it wasn't really a good setup because the stock didn't have a proper consolidation here, but it did follow through. So now you have Bemis and Company. Now see, this is the first leg, went sideways, breaking out orderly. So that's like a possible setup. That looks like a dollar breakout because it is like 0.94 and you don't see 4% breakout, so it's a dollar breakout basically. See, you'll see a lot of breakouts faded during the afternoon, in the afternoon, so not many things to work with today. NBIX didn't close exactly near the high, but still can work. Like see, orderly pullback. This is very orderly or linear up move, very orderly. See, the whole idea is basically you want to find things which are like behaving in a very orderly manners. That's a qualitative filter which you're using, and the reason to use that qualitative filter is that it increases your probability of that setup working, and it gives you a fair amount of confidence that your stop will not be violated, as against that if you have a very very volatile stock which has been jumping all over the place, then you don't have enough confidence in that. So we keep going till we find something else. See, now Winnebago, the thing is that this is where the setup started. Now this is only 3 days, didn't close near the high, so that's not a good setup. Honeywell International, this is very wide base which is forming, so that's what I don't like. I like in a very compact setups which are very linear. They don't like the. I'll show you an ideal example of a good setup once like we go through this list. We hardly have like another 10 or 15 stocks to go through. So as you'll see that most of the stuff today is like extended or like basically had fades. So you have a couple of ideas, TANH, which did close near the high. This is like orderly. See, stock went up in a very smooth manner, orderly manner. Last leg, this is a negative, that there was a 4% breakdown. So that's one negative on this particular stock. So that's a negative. BMS, again, like, and if you look at the overall stock has been all over the place. It's not really a stock which moves very smoothly based on its past behavior. So I would not have enough confidence in a move like this. And then you have NBIX, which is like a biotechnology. It did close reasonably near high, and this was orderly. So those are the three. So now these three I will copy into the momentum burst. Now all this analysis, obviously you do it intraday so that you can enter when the market is open, and this analysis can start right from the morning up. So now we have basically some one or two candidates from this particular thing. We'll still keep these stocks here 166 because we can use that for something else. So you have a bearish working watch list now. Bearish working watch list has a lot more stocks today, probably around 203, I think. It looks like it's around 203 or something, I don't know. Now again, I sorted so that you don't have to waste time on stocks which are not down more than 25 cents. So I just like will skip through this, a lot of these stocks which are just like down 1 or 2 cents. For whatever reason it got stuck there. So now let's keep going. You're looking for a short setup here, and an orderly short setup, not something which is plus the short setup which is likely to have an immediate follow through. And when you're doing this, you always look at like, what happened yesterday. This was one of the setup which we had identified as possible short setup. It did have a follow through of 6.23%. So see, a lot of these stocks which were having a breakout, they like in a reversed, which is basically a failure of the breakouts. These kind of setups can work as good setups sometimes. See, one of the things which you'll notice is like, even if you look at something like Foot Locker or MTSI, is a stock which is weak and which has gapped down and all doesn't really go down unless the market starts going down, market starts weakening. It just bounces back, and you'll see that last 2 3 days there is a little bit of pressure, and then it went down. Or similarly, you'll see a stock like this also similarly. So when you're doing shorting, it is more imperative to time it right with the right phase. Similarly, like you'll see that it just bounces. The other thing which you have to realize is that when the market is turning or the sectors are turning, then the good shorts many times are not necessarily the weaker stocks, but the stocks which are very strong and which start breaking down near their high. So you will see that a lot of stocks are like failing in terms of their breakout, or their moves are failing in certain sectors. Those are the stocks which can form better shorts than stocks which are weak. Because when the market is turning in the early phase, it's like what was going up is what goes down rather than what was already down. So not many good short setup I see as of now. So You have a lot of these kind of things where like stocks were going up and they turned. So that's like a sign of some money coming out of some of these sectors, which is very clear. There is a overall weakness in the technology stocks, so TQQ might be one to look at, but like see, it's a very volatile kind of thing. So that's uh, so this is the kind of this ideal setup you want to see, like some breakdown, then the small bounce, and then it immediately falls. That's a good setup. Obviously, it's not a short here now. Now you'll see the stocks which are near high, a lot of them breaking down like this, or not necessarily breaking down, but they are having a sharp pullback, or they are like getting into a range, because this is a nice setup. See the down move, weak rally, probably breaking down. So that's one possibility. See a lot of these breakout kind of breakouts, they are failing, like, and there was big moves and then they are failing. Even Amazon, there was a breakout which actually failed. Net is again same. Tesla, see this breakout is now almost like, and it has given up half of its gain. So mainly this was somebody's anticipation setup, which was not really a good anticipation setup because the action is so loose on this one. So when you're looking for an anticipation setup, try and find anticipation setup which is a very nice compact kind of an action, because this is something which is very wide action, probably indicator of a range or probably a top forming in that particular stock, because now again, Intuitive Surgical was also somebody's top idea some days ago, but like see, these are all extended stocks and many of them money is coming out of them. Intercept, like obviously news related, so it went down a lot, but that was a good short setup here in terms of like say breakdown here on high volume, weak rally, and then obviously you can't short something which is down 24% because it's the bulk of the move is over, but this is what to look for in a short setup. So not much to look at. Basically you have one setup which I put it in the momentum burst, and now we'll still keep this list. Now this is what you can do for 4% breakout, like say some of the ideas which are there. BMS buff, see buff is like it's not actually a 4% breakout, and it is not also a dollar breakout. This is something which I found in the low threshold breakout. Now this is a range it formed. This is the first leg, it formed a range and it is breaking out of that. So the low threshold breakout scan can help you find that kind of a stock. Okay. This Banco Santander here, it had a breakout which failed that day. Now today again it is trying to break out again, trying to break out of a consolidation. Obviously this was a better setup, or this was a better setup, but these are some of the things which I have already done analysis on for the day and I had looked at as possible. XRF, as I said, like, this is not really closing near the high, so I wouldn't really look at it. Then you have TANH. Then you have OCRX for a lower price kind of a thing. These kind of stocks can make these kind of big moves. They don't need much of a reason for that. On the short side, again, like, can I say, this is not come in your 4% breakout scan. This I found in the low threshold breakout scan, because it doesn't have V greater than V1. If you see, like, say volume was not greater than to yesterday's volume. So, but like this is a good short setup. Rig. See, this failed, this breakout failed, so this can work. See, again, a weak stock. See, it's been going down for some time, so that can work. Diamond Offshore, similar kind of a thing. Many of these kind of things, it's clearly like a failed breakout. Then you have ELF. Again, ELF will not come in your dollar breakout, and it will not come in your 4%. So these kind of things you can find in low threshold breakout scan, and on the weekend or next week I will do more videos on low threshold breakout. There are also earlier videos on how to use the low threshold breakout scan, but this is a nice setup. See here, like big breakdown, sideways move, and now breaking down, probable breakdown here, and here ZPS. So you have 12 candidates to work with in terms of like what is happening. Now what is happening to the overall market? Like there's been a fade, a lot of fades happened overall. So let's just quickly look at the overall market for a minute. See what basically is happening is you have the market made a big move, 3, 5, 6 or 10 days of move. Typically what you have seen in the entire move here is like you have 3, 5, 6, 7 days of moves, then it goes sideways. See here again there was a big move. You're not going to get a sustained follow through on any of these moves. That's been the nature of the market moves this year, or like since this big post election rally. That has been the nature. Like when a market goes up, everybody gets excited. They say, oh, I have so many setups and I'm finding, and then the market just goes sideways like same way. So probably that is what will happen unless there is a reversal. You will see that like S&P again, same here, like everybody got super excited saying, oh, like this is the clear signal to get in, and then like it just flopped around. Similarly here, this looked like a very strong bounce, and then like it just flops around. This has happened repeatedly, so my current reading or situational analysis, we are in a similar kind of a situation where you'll again probably have a choppy kind of a thing, unless a lot of selling comes in immediately and you get a 300 plus 500 plus down day. And the overheated market where the breadth is extremely positive will probably go sideways like this in a choppy manner, and the breadth or like this in a choppy manner, and the breadth will then, the overheatedness in the breadth will be over by that's kind of a move. So similarly, like you'll see that there was very choppy action here, chop. So few days of bounce followed by chop. That's the thing. And Nasdaq has really struggled. Like if you see here, it did make a move, but like Nasdaq 100 hasn't really been able to do much since July. Just a chop which is happening in that particular index, but this doesn't really affect too much. You still have to look at an individual setup. Individual setup can work for many reasons. So that's something to look at in terms of what you want to look at. Okay, so this is how what you can do is you can use the 4% on dollar breakout scan. Now the analysis which I have done, you have to do this kind of an analysis intraday, because if you do it intraday, you'll be in a much better position to find setups as they show up and enter. Because if you enter a setup, see something like this, you can still enter next day because this is up only 2%. Okay, so if you see some of these things like they are up only 2%, so obviously like that's a setup which can be entered next day, and also the stop will not be very wide. But like something like this is like really there is no point. It's up 24%. So same way, like if you see something like this, it's 2%, or this 3.91% is still a big breakdown. But that's a combination of scans, which is 4% dollar breakout, anticipation, and low threshold breakout works best. So that's really the story as far as this is concerned. And let's just quickly, it's not part of this particular theme, which is like how to use 4%, but anyway, I don't want to make a separate video for that. But let's quickly look at like the universe. Like basically on the universe, I used the liquidity and price filter. The price history above $1, and liquidity is above 100,000. So that way you're looking at only liquid stocks. And let's quickly look at stocks which are up. Say I will look at the top, say 50 stocks which are up the most. YTD, this is a column which you can put in. It is a system column in telechart. You just have to go and insert column and look for YTD, search for YTD, and you can add that column. So let's look at like what has gone up. Like this stock has gone up 13,000 1300% or 13 something like that. Obviously it was a very low price stock, and if you see like say it had a buyout or something, and that's why it is showing that kind of a move. Okay, but let's look at, say, even like this is something like this is a reverse split. So it's split 31 for 3, so that's not a true reflection, okay, of the thing. Now you have cool, which has gone up a lot. Okay, now obviously like the whole point about saying, look, why you need to use trend intensity, or if you just let the earlier move let go and just focus on the move which is trend intensity, does that work, or does 4% signal work? Or like, and I say a lot of people are now saying that look, and you should buy based on like, see, whatever new idea comes in the market, or some new trader comes in and he propagates an idea, people get like carried away, or they believe that that is the solution. The ideal way to check any idea or any hypothesis is against the stock which are done the best in the market. And if you find that look, that particular hypothesis is not necessarily true hypothesis, then you don't really spend your time and waste your time on chasing a setup like that. That's what this can allow you to do. So that's one. Like, Avio pharmaceutical, again, like, what you'll see is that big breakout, then like, and I say here 4% breakout. So then again 4% breakout didn't really follow through. Here again 4% breakout didn't follow through. So again, the question about like, you have to find trends earlier. The more they become mature or they become older, they don't do the same way, or they don't behave the same way. Or buying a breakout after a stock has made a move and it is extended in terms of extension, in terms of number of days it is about TI65, you will find that it doesn't work so well. Opnet, again, you'll see that look, and here see, this is might be a thinly traded stock, only trades 55,000 shares, but here it did make a big move. Now you have DVAX. Now again, you'll see the same thing. Stock wasn't going anywhere. In fact, stock was near 52-week low. From there it had a big catalyst, and then it started going up. Here you had a couple of signals, like this was the 4% breakout, and here like 4% breakout. Very nice setup, didn't really work, failed. And then this particular 4% breakout started. Now it's an extended setup in terms of age of the trend, because it's already like 3 or 4 months. And the other thing which you'll see is, if you do this kind of a study, and which I highly recommend everybody to do this kind of a study, because this is something, what you learn from this is something which is the reality, means this is what is actually happening in the market. As against that, if I tell you something like, look, and I'm sitting on an island and I'm telling you about how I made $1 million using this setup, that setup may not be the reality. What is here is reality. This is what is really the nature of moves, and this is what really happens, and where the stock will show up in your scan, how it will set up, all those things you can see. If you want to find stocks like this in the future, then you have to do this kind of study. Now even Zoma, same thing, like say stock setup. Again, this is a very thin stock. So one of the things which you have to do is, if you use the filter, classic filter which I use, which is 100,000 plus liquidity, many of these stocks will not show up in your anticipation setup. So keep that in mind. But like say, this is a very nice setup, or Sangamo, SGMO. And the other thing which by now you should notice is all the stocks which made the big moves, they're biotechnology stocks. So anything can happen in biotechnology, they can make big move. This is 22%, and this was a very nice setup. Again, it will show up in a 4% record scan. You can see and study by each signal, and you can do your own study basically. But that's really what I wanted you to have a look at it and decide. Some of the strongest stock will not even come back to 52 day MA, or they will not even come back to 65 day MA. So if your setup idea is to like buy at 65 MA, you might want to check that hypothesis out on your own, rather than listening to somebody who's telling you that's the ideal buy point for a stock. If you make that as your only setup idea, you're going to miss out on a lot of stocks, very strong stocks, which will never come to that particular kind of a buy point. So keep that in mind. It's like, and I say, most of the strong stocks, they will just go. They will just go. They will not come back. They will not give you a chance to enter, kind of a thing. So that's really what you have to look at. Does anticipation will find setups like this at this stage? 4% will break, find out some of them, and now the low threshold will find most of them, because it is designed to find most of the setups. So Esperion, again, like say, stock is really like, and he made this big move, went sideways, then is going up. Okay, Weight Watchers, again, like in a stock, very strong stocks. And if you like, because I get a lot of questions from members, they also see some of the things like the current flavor is about Mr. X, so he's been talking a lot about moving, buying at like 55. So I get a lot of questions about that, and I always reply to those people saying, look, and that's one possible setup idea. Uh, just check it out as an hypothesis, saying that, look, and does it make sense in terms of like many of the strong stocks will not even come to 65-day MA. By the time they come to 65 MA, it might be too late to buy. So that's one of the things which you have to look at, like probably as a possible this thing. Okay, I'm not saying that that's a wrong setup, but that's a possible one of the setup in your bag of trick which you can use, but don't make that as your only thing. That is not necessarily going to be your best idea. You can use that in addition to 4% dollar breakout, other things, but if you make that as your only thing, uh, you might find after 6 months that you've been chasing idea which may not be the best of the idea. Myocardia, again, like say how moves happen, that's what you want to see if you look at it. And these are all biotechnology. So there is always in biotechnology there's a catalyst, and then the stock goes up, and sometimes it goes up rapidly, then it sets up, and then you can try and capture the second move. And even say like this particular case, like you had a gap up, or like in a gap and go, and the stock was up 83% and it still kept going up. So those are some of the things with biotechnology stocks, the nature of biotechnology stocks. Puma Biotechnology, similar kind of actions you'll find, like almost every biotechnology stocks will have a similar kind of setups, basically a bio. Now this is the kind of setup idea which you want to see. Basically, stock going sideways shows up in your anticipation setup, breaks out, and then makes a big move. It made this big move only in one day of 22%. After that, it just been going sideways. May probably break out or just keeps going sideways, because it made too big a move in one day, according to me. Uh, so you will see that most of the things which are going up are again like say the biotechnology stocks. Similarly, like say if you look at this fold, how they set up, where you can find buy points is what you need to study basically, and that study is what will make you a better trader than anything else, which is like somebody else's ready-made picks or somebody else's scans is not going to make you. Okay, so again here like in a stock did go up, so why use anticipation kind of a method? Anticipation might find you this stock in this particular phases, and then might offer you an entry point. Instead of looking for a 4% breakout, you would probably enter it earlier if you use anticipation. So those are some of the things which you can learn by studying this. As you can see, all these are biotechnology stocks. So biotechnology stocks make big moves, and you can do the similar study by looking at TI65 and looking at stocks which are like up by TI65. This will be more relevant because it only uses 65 days data, and you'll see again same way stock setup go up, DMTX. The other thing is like a lot of people want to find stocks which they can hold for a year or something. Most of these trends have a lifespan of only 2 or 3 months, and that you can see. That's another thing which you will notice, that look, most trends don't last for more than 2 or 3 months. So if your holding period hypothesis is that I want to hold for longer period of time, then you might want to revisit or really confirm your hypothesis as to whether that is the right kind of a hypothesis, again going sideways. And then once in a while you'll get a stock which is going to make for every single stock, or every once in a while stock which makes a month move kind of a thing. Okay, you are going to find hundreds of stocks which are going to be just 1 month or 2 months kind of moves. So in hindsight it looks very nice. Look, I should have bought and held it, but those kind of stocks you'll need a special technique or special skills to find those stocks right at the moment when they are setting up or they are making their big move. Otherwise you'll find that most of the stock moves are of only 2 to 3 months. Most of the time, like once a stock becomes like say 100 days above TI65, it becomes like some of them can continue to go up, but most of the time they become very vulnerable to reversals, or they just go into a range. So keep that in mind. Do this study. You'll learn a lot. You'll learn ton of things by doing this study, because you'll really understand the real nature of moves in the market, how they set up, what happens, where do they start the move from, do they start from 52-week high, or do they start from 52-week low, and how do they progress basically, and what happens during the progression. So this is the kind of thing which you're always looking for, which is like a consolidation from which stock had a breakout and did make a move. So those are some of the things which some of the scans like 4% will allow you to capture. Anticipation will allow you to capture some of the other things. So do this study. I would say that like definitely on the weekend do this study stocks by YTD, study by TI65, and find out whatever hypothesis you have. Okay, look, is it really a valid hypothesis, or like say whatever you want to like this was actually a 50-day moving average. Actually, if you put a 65-day moving average, you will find some of the strongest stocks will not even ever come to that kind of a thing on the YTD. So see, if you see, most of them will just go. Okay, they will spend most of their move significantly above 65-day moving average, and by the time they come to 65-day moving average, it will be a reversal time probably. So the moral of the story is, look, and I don't believe anything, okay, even what I say also. Do your own study, because and do study based on actual reality, like these are stocks which are actually up for the year, and then that will tell you what needs to happen. Similarly, like yesterday only night only, I had an email saying, look, I want to only focus on ETF. I said like, okay, fine, and that is what you want to do, but like remember that look, many of the biggest moves may not be in ETFs. Like if you see, like and some of these may not be very liquid also, so that you have to remember. Like I've taken the ETF list and done it by YTD, and you see that only 6 ETFs or 7 ETFs had a move of 100% plus, and that too many of them were like so illiquid that there was no way of you capturing any one of those moves, as against that how many stocks were having a large move. So these are some of the questions which are, to me, these are like hypotheses. Anybody who says like I'm going to use only ETFs is making a hypothesis that that's the best way to trade based on whatever little knowledge that person has, or somewhere he hears saying, oh, the real money is in only ETFs, or real money is only in catching longer term moves, or real money is in buying stocks when they shake out near 65-day moving average. Try and understand, check that hypothesis, and that setup might be valid setup. You might add it as one of the things in your basket of things which you want to do, but that may not be the answer to your trading problem, or that is not how the market works, is what you have to understand, and then do things with an open mind basically, based on actual scientific evidence of what works and what will actually find the moves which are happening in the current market environment. Like see, if you see Weight Watcher, which made a big move, it never came back to, and probably this move is over now. It's a way extended stock. It has like gone up a lot. It's been up for almost like this thing. So it might be vulnerable to a reversal someplace, or might just go into a large range. But basically, that's what I wanted to show with this little bit of thing at the end, that study stocks which are going up a lot, because that's your best study. That is what you want to find, and that is where you want to like find different setup ideas or different kind of scans to capture them at different points. The 4% breakout will capture some of them, dollar breakout will capture some of them, anticipation setup captures some of the good buy points in them, and now the low threshold breakout, which is what I've been using nowadays a lot, captures some of them. Like low threshold breakout, it basically looks for stocks which are basically this is, I have a video on this, look at that video, that explains it a lot. I don't want to spend time on this, but like it will capture other buy points during the trend, and your objective is to find a combination of setups which together when you trade will ensure that you find most of the buy points during the trend, where you can get in and swing for money.